The 5 biggest stock market crashes in history. Trillions of dollars wiped out, sometimes in a single day. These crashes reshaped economies, wiped out life savings, and changed how markets are regulated forever. Here's how each one happened. Number 5. The COVID crash of 2020. In February and March 2020, as the world shut down almost overnight, the stock market crashed faster than it ever had before. The Dow fell over 10,000 points in just a few weeks, and trading was halted multiple times as circuit breakers kicked in to slow the panic. What made this crash unusual is how fast the recovery was. Markets bounced back to new highs within months, thanks to massive government stimulus and interest rate cuts. It remains one of the sharpest, fastest crash and recovery cycles ever recorded. Number 4. Black Monday, 1987. On October 19, 1987, the Dow Jones dropped 22.6% in a single day, still the largest one-day percentage drop in history. There wasn't one single cause. A mix of computer-driven trading, a weakening dollar, and rising interest rates all combined to trigger a wave of panic selling that fed on itself throughout the day. Computers were programmed to automatically sell as prices dropped, which only accelerated the crash further. In response, stock exchanges introduced circuit breakers, automatic trading halts designed to prevent this exact kind of runaway panic from happening again. Number 3. The dot-com bubble, 2000. Through the late 1990s, investors poured money into any company with a dot-com in its name, often with no profits or even a working business model. The Nasdaq skyrocketed over 400% between 1995 and 2000 as this speculation reached a fever pitch. When the bubble burst starting in 2000, the Nasdaq lost around 80% of its value over the next 2 years. Amazon stock alone fell from $107 to just $7 a share, though it would go on to recover and grow far beyond its old highs. Most other dot-com companies from that era simply disappeared entirely. Number 2. The 2008 financial crisis. Years of risky mortgage lending to borrowers who couldn't really afford their homes eventually caught up with the banking system. Banks bundled these risky loans together and sold them as investments, spreading the risk throughout the entire global financial system. When housing prices stopped rising, the whole system unraveled. Lehman Brothers, one of the largest investment banks in the world, collapsed entirely almost overnight. The crash wiped out around $8 trillion in market value, and millions of people lost their homes and jobs in the recession that followed. Governments around the world stepped in with massive bailouts to keep the financial system from collapsing completely. Number 1. The Wall Street crash of 1929, the biggest stock market crash in history. After years of reckless speculation, where people were buying stocks with borrowed money and putting down as little as 10% of their own cash, the market finally collapsed in October 1929. On Black Monday and Black Tuesday alone, the Dow fell nearly 25% in just 2 days of trading. Over the next 3 years, the Dow lost almost 90% of its total value. It didn't just crash and recover either. It dragged the entire country into the Great Depression, a decade of economic hardship that reshaped how markets are regulated to this day. Many of the financial safeguards we still rely on now exist specifically because of what happened in 1929, and that's the 5 biggest stock market crashes in history. Notice how almost every single one followed the same pattern. A period of excessive optimism and risky borrowing, followed by a sudden loss of confidence that spirals fast. Each crash also led to new rules and safeguards meant to prevent the exact same mistake from happening again. Though history shows new risks always seem to find a way in. Markets have crashed before and markets will crash again. That's simply part of how they work. If you like this ranking, subscribe to List Logic. We rank the best and worst of everything worth knowing. See you in the next one.